Everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Well, happy Wednesday. It's live stream day, so I'm super excited to be here. Thanks for hopping in chat to let me know we're live. Philip Zach, hello. We are going to cover Bitcoin and what we think will happen next. It's always a crapshoot because, you know, the future's a little hard to predict, but there are some basic principles. And we're just going to talk about some of these briefly today and just do a general analysis on where we are and where we're headed. If anyone has any questions or whatever, go ahead and stick those in chat. I'm able to see the chat on YouTube, LinkedIn, Twitch, and Twitter. So anybody that wants to pop in there, we're good. All right. Let's first of all kind of recap what we've done. Bitcoin has accelerated crazily off of our inclining support. And when we finally exited our yellow-red zone right here, we just absolutely launched. There was resistance at the 100, and we stopped, started a new candle, pulled back and found it as support, launched up to the bottom of our trading range, and then had a pause. We had a break, do a little bit of work intraday to get through these levels. We started a new candle, came and got support on the bottom of our trading range. And by the way, for those of you who might be new here, these trading ranges we put on back here 6 months ago. So this is not something that I'm just showing up, you know, to kind of capture at the very end. That's not what's happening. Local Liquid, hey Calvin, just got to the dentist office, gonna watch this when I get out. Great stuff always, man. Appreciate that. Thank you so much. So yeah, we got support off of this bottom range right here. And I thought for sure, so this is me trying to predict the future. Sometimes I can get it and sometimes I just can't, but I thought for sure, man, we've gone up so much. This move is so intense and we've had no break ever since the bottom of this move. The 200 is an 18% move, which we haven't seen anything like that in months. I was like, oh man, we're gonna hit some serious resistance on this 200. Well, the second we got close to it, we just struggled and struggled, and we finally touched it, and then just blew through it by, what is that? 19,500. We closed at 19,900. So we went up another $400. And so, I mean, this just tells the story. Major resistance points, you either stop on the resistance and then have a fresh start to start a new one, or you have to blow through it with a giant candle, because it's very, very unusual for you to just kind of sneak through a major level. That's what made this one so weird. This was an anomaly because we didn't do a big candle to blow through it, and this certainly just kind of snuck through it. This is definitely the oddball. So this was weird, and it took us a few days to find support and gain more traction before we moved up. So we're above the 200. Well, man, now there's a lot of blue sky above us, right? The blue sky, the top of the blue sky is here and here. This is the top of our trading range. The same trading range we've been looking at for months on this channel, for 6 months. And this is where the party is starting to slow down. We have had quite a move upward. And finally here we had, let's see, the high was 21,444. Our big number was 21,600. So 21,600 is our significant resistance. And so anyway, we attempted it here. We got really close here. Our high was 21,584, so we missed it by, you know, 10, 20, $30. And then this morning, we tagged it 21,639, and the minute we did, we turned right around and fell down. So you can really see it on the 1 hour. See this? I'm gonna have to. Interesting. So you never know where these lines are going to show up. So you go to settings. Yeah, it does show up. Oh, it didn't show up on the hours. So it shows up on daily and minutes for some reason, but not hours. I'm not sure what the rhyme or reason is, but okay, let's go back to the hour. Here's our line. This was our top line resistance after all of this. And if you zoom in really good, let's get in here where we can see. We stretched all the way up, we tagged it, and it was the only one that really touched, because this one was close. This was yesterday. This was the day before. So we had a couple of reaches for it, and this was the one that actually tagged it. And the second we did, we turned right around and just absolutely fell off the earth. Don't you love that? So these markets are so emotional. Like, there's a rhyme and reason to it, but you know generally what's going to happen, but you don't know exactly what's going to happen. And because of that, that's why we have to keep our trades careful. We've got to be conservative. Okay, so there are several things. The name of this stream is how to identify these tops and bottoms. And so there are a couple of tricks that I look for, and the people that have been around for a long time, people have followed me for a while. You can kind of tell. A couple of these rules are selling climaxes create bottoms. So these major moves usually create bottoms. Buying climaxes create tops. So it can go both ways. If we get oversold or overextended, there has to be kind of some sort of recovery. That is a pretty decent way to find a bottom or a top. It's almost impossible to tell the difference between, because see, you know how they say don't buy a falling knife? When we're dropping really fast, you don't know if you have another 20% to go before you get your dead cat bounce. You just don't know. And so you have to be conservative and you have to be careful. And when you're leading into a momentum change, so when we were going up here and looking for that top, I didn't know if we'd get a nice gentle move or if we'd pull back really hard. And so sometimes you have to draw a line in the sand, especially when you're around a major move. So I actually did take a short here to hedge against a drop that would happen really fast, because I had no idea if we'd get a nice gentle rollover, which is what we ended up getting, or if we'd just get a sudden sharp drop to the downside, and then we'd have more work to do to consolidate. So even though I knew a drop was coming, and I knew that something had to give, how to play it is the challenge. And so in the pro channel, I'm looking at, what's my long exposure and what am I hedging against? What can I do to keep the profits that I have? And those are all things that have kind of weigh into the decision. So that's a major one. The other thing to watch for when you're identifying tops and bottoms is that larger time frames are more important. So when you see trend reversals or changes happening on larger time frames, those are the things that speak louder. So even if we go to like monthly, it's monthly bullish engulfing candles or monthly, doji tops. These are the things that we look for. They're just real small candle formations, or you can also tell with the RSI and other indicators to see that things are getting kind of crazy, and you got to be watching for some sign of a change. Sometimes they happen fast though. Like in this case, in 2017, we were getting really toppy. We were super toppy, and we hadn't had a real good reversal candle. We did get a hanging man right here, but it was negated as we just continued to launch. And the opening of this candle was around 10,000, and this was the candle where we went up to 20. So, I mean, pretty brutal to start at 20. We didn't have a signal until this candle showed up. So we didn't even know that we had our bullish almost engulfing. It wasn't textbook or anything, but you could tell that there was a serious decline happening at this candle. And by then you had lost 50% of your gains. You know what I mean? So it's not, markets never play nice. I'm a very skeptical type of trader. My opinion is that markets aren't here to make you money. They're here to to trick you out of your money and to take what you've got. And so I'm always on defense when I'm trading. I don't, if I see a trend and I've got a nice low buy order and I'm positive, I'm willing to let that trade run because, like I was telling the pro channel this morning, I'm not here to make a week's worth of salary. I'm not trying to, make a day's wage. I'm trying to make a year or two. And so I'm looking for these really long-term moves that really make money. So I can't be scared out of a good position. But I'm always skeptical of everything. And that's why I jump on these moves here. Like when the Bitcoin's moving up too fast, too quickly, I get very skeptical very fast because I'm wondering who's behind this and what's the motivation. Is this where does the rug pull happen? I'm always on defense all the time. And so there's a lot to unpack. So those are just a couple of secrets and tips that I like to use when I'm looking for tops and bottoms. But let's get a little bit further. Let's see. Blue Sky says, how significant would it be if the 4-hour candle closes outside this channel, which we had earlier today? So I'm going to show you the channel that Blue Sky is referring to. So on 4-hour, I drew this, I think last night on the Pro channel. There was kind of a story happening because you can see most of these moves where we've had a move up and then a consolidation, they all sloped downwards. This is a downward move before we popped up, and these downward slopes they are bull flag patterns. So these are bullish. When they slope down, they're bullish, and the psychology behind that is bulls had their chance. Now what are the bears going to do? And the bears, they had a weak performance. Bears are weak. Okay, great. That means bulls are back in charge. Bulls take it. And then, okay, bears turn. All right, let's pull it back. We couldn't even barely pull it back. So, all right, bulls go. And then bulls take it. And then bears give it a shot, and they couldn't even budge it. Like this is still sloping down, but it's weak. And then bulls take it again. And now bulls really, really went. So you can kind of feel how overextended this particular move was. Well, all right, bears turn. Bears, where are you? Where are you? Anyone? Anyone? And we're sloping upwards. This is a continuation of the bull move. Had we ended, you could say that there was a bull flag right through here. I'll just draw it just so you can see it. But at the top of this candle here, we are sloping down right here. And I'll copy and paste a copy of that. You can see how we've sloped down. And so there was a bear flag on the table, but where was our answer? We'd had these moves after every bear impulse. And so if this had broken out the way we would have expected, we should have had a giant push again. But we didn't get one. And the fact that we didn't get one means that the bulls are still working on they still had a push. and it became a continuation. We had a strong move here, and then we started this channel. The channel was weak. So now who's weak? It's the bulls that are weak. The bulls are now losing momentum. They're the ones that can't budge against the bears. And so we have sloped up. Yes, we have. But this channel, even though it can break either way, we already overextended on the way up. And now all we're doing is just showing for days now that we don't have enough strength to do another rapid move up. You need the bears to show us what they have. You have to see the strength of the bears before you know how strong the bulls can come back. So if the bears just run this into the ground and bulls attempt and it's weak, and then they just get run into the ground again, you can see who's in control quite fast. But we have not seen a legitimate strong move from the bears at all. And I am definitely looking for entry points because I'm not trading a 4-hour candle. I move into lower time frames just to get more information on a move and kind of look for timing and different things. But I'm not making decisions off of a 4-hour candle. I'm making decisions off of a daily and a weekly candle. And the weekly candle says we have completely changed downward momentum. This candle is the first time on the weekly that we had a failed lower high. We've got these highs, they're lower every time. Lower high, lower high, lower high. This candle closed at exactly our prior high, which means now we are fully in sideways consolidation mode. So even if we pull back a little bit, our downward momentum is completely stopped by this move. In fact, we do need another low, and this could be it. I mean, this 18,800 is a solid place where we could find support on the weekly. But here we have 4 days left on this candle. If we get anything like a doji or a reversal, or even if we touch the top of this and pull back or whatever, we have time to pull back and give the bears a chance. Once the bears are out of money and they've done all they can, and then we return back to this level at this 20,800, because that is the magic number right now. 20,874. So about 20,900, we'll just say. That is the kicker. This is the place where if we move off, we will move off strong. And this also becomes a place of future support. So when we're all the way over here and we're all excited because we've made it to 25,000 or whatever, and we retrace, where do you think we're going to go? The strongest support will be this move, this most recent high right here. So we need to go down to create a point of resistance that can flip to support on the other side. So this is why we don't want to just get too excited. You know, we'll probably see this number in a few months. It's not like we're just going to go straight up and never return. If we do, that's okay. I mean, we are planning to be bullish right now. So if we do, then that would be unusual, and we want to be on the right side of that trade. But if we do pull back and we come in and we have a few months to kind of have the bulls test the water, and then we come back for the bears turn and we find support off of this, we're ready to rock and roll. Like this is the support that we need to make it to the next move. So this becomes our next move, 24,000. So we get to about 24,000, we pull back to 21, and then we get back to 24. Well, now we're ready to move to here, 36,000. And we would come back and find support, usually somewhere around here. So when the momentum is completely shifted, we need these pivot points marked in our books. But now that we know on a larger time frame that there's a change in the air, there's a change in momentum, on the larger time frames are screaming by at us. Now we can dip down into the lower time frames and say, okay, we're overextended. We need a chance for the bears to do their thing, and I'm going to be really, really quick to the trigger to be finding a long, because the larger time scales are bullish. So if we can get a nice entry point on these shorter time frames, then we're setting ourselves up for the next 3 years. It's going to be awesome. So that's kind of what I'm looking for. By the way, I wanted to congratulate the new people that showed up in pros. It's fun to have people here, and I'm looking forward to your thoughts and ideas. And I'll try to coach you through stuff. So anyway, but yeah, this is the direction of this market. Some people get upset, they get worried. They're a little shell shocked from all of this massive brutal beating that they took from this bear market, and so any pullback is scary for them, but this is not scary. In fact, a solid return back to the 200 will be magic. It will give us exactly what we need to go higher. So Dilemma, thanks for the good vibes. And Blue Sky's asking, why not 29 to 30 and why higher up? I'm not entirely sure what you mean. 29 to 30. Yeah, this is a good place. We could find resistance here because there is there's a lot of price action here. The more time you spend in a range, the more open orders are left or placed when you leave that range. That's why these points become significant resistance or support. So if you come down through here and you found a lot of support and people are buying and selling and buying and selling, and then finally you wimped out and you blew through the support, well, all the resistance orders that were placed in this area are still there. They never closed. And and this is just on average. The average is that the side that weakens out, the buy orders got fulfilled, and now we're down here. The sell orders never got filled. And so all these sell orders are sitting over here waiting. And then if the price ever comes back up to those areas, we have to battle through not only the sell orders that showed up during this whole period, but we also have to deal with the sell orders that were placed back here and left open. And so there's a lot of resistance up in this area. That's why these ranges become important. So if we fight through those sell orders and battle, and then we pop through the top of it, all those buy orders are unfulfilled. And you'll have a ton of buy orders in here, and that's why support flips from resistance to support and back. So that's kind of how support and resistance works. And that's also why I'm very careful to look at these levels. Increasing resistance and supports are not as strong as horizontal ones. Horizontal ones are the first thing you want to look for because these orders will just sit there forever. Increasing supports means that people are moving their stops up or they're moving their limit orders up. And they're filling in the order books because they're trying to catch a wave. But this is mobile. That means they're filling it in as it goes. But this, it can just sit and stagnate, and people can just pack these on and set it and forget it. And so there's a big difference between those two types of resistance. So this is the start. I'm expecting a move to the downside. What I don't know, and this is what you have to remember, is I don't know how significant or how strong the impulse will be. I just don't know. It's possible that the bears, even though the bulls have really overextended themselves and they've lost control, this is a loss of control of bulls. I don't know if there's a lot of institutional money and a lot of whales and a lot of people that have been waiting, just like I'm waiting, for a move down. And some of these whales might be impatient. So I don't know if this move down will be snatched back up and pulled back up. So I don't know if it'll go down just a little bit. Like, I don't know if we miss the 200 on this time around. Maybe we only come back halfway, maybe like 20,000 or something. I don't know how significant this move will be. I know we need one, but I don't know how long it will be. The longer it takes, like if we go sideways or slope down, and it's a weak move and it's long, the stronger the bull move will be on the other side. So if we just go down for a few days and then we pop up again, I don't know. It'll be I'm kind of like on the fence whether how that will play out. So we kind of have to be careful. But if we get a strong move down, and it stays there, then the bears were stronger than we thought. But it's not going to negate any of this massive move that the bulls have given us. So even if we pull back all the way down to the bottom of our trading range, there's nothing unhealthy about this or scary about it. This is a really awesome place to consolidate. And the reason why is on the larger time frames, we're going to be generating a giant reverse head and shoulders. So moving down to this range before we head back up and retest the tops of our thing, it's just nothing but just gold. I mean, it's going to be awesome. But this move sold me. When we got back up to here on the weekly time frame, we're looking for a move up. So a lot going on. We have a golden cross that is currently on the schedule for February 9th or 10th. And I'm watching this ever since I put this on the 14th, so 4 days ago. And I'm watching the trend of the 50. I'm watching the trend of the 200. If we get a golden cross and our price action is above the golden cross, we're going to have a bullish impulse for sure on larger time frames. So a lot of positive things to look forward to. Back to the 4 hour. This chart is sort of our breakdown. We had an ascending channel, and we have broken to the downside. We have a full candle that's below our trend line. Is it possible we get another candle to move up to hit the bottom of this as resistance and then fall apart? That's totally possible. On the shorter time frames, this was a pretty strong, as far as a bear move. This was the bulls really pulled this back up. We've moved all the way to bottom of 20,404. That's we dropped pretty good, but we just bought it right back up. You can see on the 1 hour how quick it was. So we started our new day, the start of that 4 hour candle. The move from the bottom and all the way back up to support all happened within an hour. So bulls didn't want to let go of that very, very quickly. So there's a lot of strength here. So yeah, it's gonna be interesting to see how this plays out. But I want to allow this to go, so I'm being super patient in my move. All right, one more question by Blue Sky. By institutional money, do you mean exchanges? Not sure if traditional institutions would be investing right now because of regulation fears. So institutional money, I kind of just have a general term. I really like the Wyckoff psychology, and I like the idea of the composite man, that all of the large movers in a market, whether they're actual institutions or just whales, because there are a lot of people that got in early, and there are a lot of groups that have hedge funds and they have money that isn't really necessarily, if it's private money, people can push things around like crazy. It's only when you have a regulated exchange hedge fund or something that you really have to do a lot of careful reporting and things like that. So, and being global, there could be money anywhere in the world pushing things around. So it could be governments, it could be anybody. And there are large enough exchanges to handle that. Coinbase and Binance exchange a giant amount, especially Binance. They just exchange a giant amount of the world's money, and institutions can't sign up there. But anyway, this composite man idea is that all of the big movers, the people that have, this is the smart money. I'm always trying to align myself with smart money, or at least predict what they're going to do. And that's really the ticket. Well, smart money knows we need to pull back. And so smart money has pushed it out of our channel. And on the 4 hour, we had our first close below the 20. So this was the first real signal. We closed below the 20. So even if you don't believe in this channel or anything like that, closing below the 20 is a big move. because all the people that are doing Bollinger Bands and other types of trading, there's a lot of large amounts of money that look at this indicator. So the 20 is super important. We closed a candle below, and now this is our first candle outside of the 20. And there's a lot of, you can tell there's a lot of people that want to catch a deal, and they didn't get in on this run. And so there's some emotions at play. But I just feel like I need more than just one day, right? Like this is our first actual candle that's dropped a little bit, and we're only at 20,900, and it hasn't even closed yet. We got 4 more hours. So I'm not trying to, this doesn't feel like a pullback to me. Our swing low that happened at the top was at 20,875, and so we've got to at least close below that, or else this is still a move upwards, right? So I'm really watching carefully to see this. There might be some retail that will get scared out if larger money pushes things down a bit, but man, I really think that 200 is a sweet spot. This would be the most conservative place to go long, and I'm gonna close my short. My short was to protect against downside, knowing that this is such a pivotal place that we'll likely get there again. And so I think there's a greater than 50% chance that we do get there. And if I can, I'll just exit that and we'll be ready to rock and roll. If not, I'm watching this move to see, how it weakens. How does it play out? Where's our next swing low? All of those things. And if it ends up being higher, well, there's my answer. I'll just take a loss and we're ready to rock and roll, because this is a market that after that weekly close, I'm looking for a long exposure all the way across the board. All right, Peter, thanks for joining, buddy. Given the international situation, how probable to you is it to go back to 17K? So there are a lot of speculations that we haven't seen the brunt of our recession, and not just US, but worldwide. I know China's reopened, and reopening China will bring cheap products back to the market, which will also help with inflation. So there are things that are positive there. As far as unemployment, though, US has not seen unemployment at all. And I'm not entirely sure of the reasons behind that. I almost wonder if so many people have just gone onto welfare or something. Like, I wonder if they just gave up. But the people that are still pounding away and working hard, they're doing what it takes. It's kind of like, yeah, we're in a recession, things are rough, I'm getting cut, my hours are getting cut or whatever. Well, I've got 3 jobs. You know what I mean? So I don't think you can just take unemployment numbers as is. I think people are definitely suffering. And I think there's a percentage of the market that's just like, I can't keep this up. I'm just going on welfare. I'm gonna go find a workplace injury or do something. But yeah, it's a rough world out there. People are really suffering, and I know we need that. Unemployment needs. Another reason unemployment rate hasn't dipped is multiple part-time jobs. Exactly. I think people are doing everything they can to keep their nose above water because they have to. Like, I don't think the savings rates are so wonderful that, I listen to the news and they're like, oh, well, employment hasn't softened and this and that. Oh, there's too much savings out there, and that's why people are still willing to pay too much for products and things. And it's like, I don't know. I think people are struggling. But there have been economic forces that have been introduced. It used to be that a full-time job was 40 hours and it had benefits and everything else. Now a full-time job is like 32 hours and you don't get benefits, and there's all these sacrifices people have made. So when the rest of the economy, when unemployment really does show up, that means people are going to be desperate. It's going to be really rough. And anybody who has any savings or anything, any hope for a prayer of anything extra, it's going to be out of the market. So, it's really, really hard to say, what will it look like? It's possible that a lot of the spare change has been taken out of the market already, but I know when unemployment increases, that could push prices or push our market down. I've always said this though. If you put the right market structure in place, it almost doesn't matter what else is happening. Almost. It's if we have like let's just say we have this weekly setup, we have a perfect reverse head and shoulders, and we're back to here, and suddenly unemployment goes through the roof, and the U.S. economy drops off a cliff, but we break the neckline of this, we're going up. Like the thing is there are people that have a lot of money out there, and unfortunately, the people that are moving markets and can buy things like this, they're not you and me. They're not the guys on the street work. Well, I mean, but there's not the poor people. They're the people from all of the trillions of dollars of rescue plans and everything else. Did you see on the news that 2/3 of that money ended up in the top 1%'s pockets? Well, who do you think moves markets? It's not the 99%. It's the 1%, the people that have all this insane amount of money. And when they see an opportunity, they will move with it. So even when if they lose faith in the stock market and there are indicators and there's a lot of things pushing things down, if Bitcoin has a perfect setup and it's an alternative and it's actually showing strength in the face of a recession, where do you think the money's going to go? You know what I mean? So it just has to have the right structure. And we are getting to the place where that structure is starting to show up. So it may not be that bad. Could we go to 17,000? It's possible, but I really would put a low percentage on it in my mind. So really awesome question, Peter. That was very, very insightful question. Peter asks, because to have a proper bull run, we would need the people to take part in it. So historically, Bitcoin has been a grassroots coin. It has been the movement of Bitcoin has majority been retail. Retail has pushed this. Not so much anymore. Billionaires know all about Bitcoin. Anybody that knows anything about money knows that it exists. There are some old guys that are from the old world, the Warren Buffetts of the world. They're still so dependent on the old-fashioned banking system that they probably can't see the paradigm shift. But everyone who's fast and loose, who's got an open mind and is educated and has a lot of money, they know about Bitcoin. And nowadays, Bitcoin is more of a reflection of global wealth rather than retail wealth. So I think that has changed. I think, Peter, you're right for the way things used to be. But I watched Bitcoin in 2012, and it was absolutely nerd city. Like it was a bunch of poor nerds running around buying, and they were emotional. Like they would dump everything all at once. They would buy up as much as they could. Markets were all over the map. It was so insane. And then by 2017, you could tell hedge funds were here. A lot of these trading rules started being obeyed because the people that follow the rules are the people who created them, right? And so Wall Street shows up, and things are starting to show, things are starting to make more sense. Now we've got major money that's interested. The BIS, which is the, let's see, they call it the Bank of International Settlements or something. It's the central bank of central bankers. They're the ones that have been trying to figure out what to do with CBDCs and all of this and that. And they've approved that central banks can now hold 1 or 2% of their entire exposure in crypto. And that is to pave the way for CBDCs. But I think a lot of that could flow over to Ethereum or Bitcoin. We're talking about trillions of dollars that can have exposure to this. And then think about BlackRock, where they've got $15 trillion under management. And they announced that they are actively buying and trying to get a solid stake in Bitcoin. They're the ones that really know how to manipulate markets. They'll try to scare retail in and out, and they will take advantage. So I don't know if that's a good thing or not, but where my experience is and my trading history and just kind of the way I I do things. Um, I've done well with in a pond full of whales. I've managed to keep myself out of trouble, and it's all risk management. It's reading charts very carefully and looking at the alternatives. You know, if things are moving too fast, what's the end game? You know, when's the rug pull? How long will the music keep playing before the party's over? And it's just being very, very skeptical. And so, anyway, but you see my analysis. These are the things that I'm watching. I watch all these moves. I watch large time frames. I look at small time frames. But it is the weekly that makes you money. If over the course of the next year we figure out how to consolidate sideways, I think we'll get overextended because I think people will get excited, and we could move up into the 30s and whatever. I feel like there are some serious drops to be had because there is turmoil, and large money loves to feed on bad news, and so they'll push people out. They'll try to get people out of their positions, but the one strength retail does have, and this is why I've always loved Bitcoin, is that you can't be diluted out of your position. If you own a Bitcoin, you own 1/21 millionth. Like, no one can stop that from happening. Your stake in Bitcoin cannot be diluted. If you have $1 million, they'll print trillions on top of your head and you'll own a smaller and smaller percentage of the world's float. But on Bitcoin, it is impossible. So if the whales are moving things around, but you have a long-term time horizon, and you're just like, I'm buying whatever I can, and I'm just going to hang on to it forever, nobody can take that percentage of the coin supply from you. It can't be diluted away. It can't be taken from you. And that's what brings you to an equal playing field, even when you've got whales moving markets around. So a lot of thanks for all those thoughtful questions. That definitely just became quite a philosophical discussion today. But yeah, that is exactly where we are. Someone in the comments said that they missed the old days where I used to go through all of the coins and talk about things. And yeah, I'm sad to say that I have moved all of that over to the Pro channel because, when I'm just trying to talk and get an audience, the biggest, Bitcoin and Ethereum will drive everything. And so we have to kind of, like, that's kind of my public service, is to say, hey, things are going to be warming up. But if I went through every single coin, it would literally take me like a 2-hour video every day. I don't think anyone would appreciate that, except for the few really, really hardcore nerds that are here. So, but yeah, there are a lot of things happening on the altcoin market, though. Just amazing. Interesting that we have a red day and we still have coins that are just, finding new highs today and all of that. A couple of these, Ocean has been an unbelievable trade. But as far as the altcoins go, we're following Bitcoin. All the altcoins, I can't say all, 95% of the altcoins will fall with Bitcoin as it's doing its correction down to find some footing. But I still think that the alts are in such a good spot that I'm going to be looking to accumulate as we drop. And if I can do that, and then Bitcoin returns back and we start showing some ferocious strength, every one of these babies is going to be hitting doubles and triples. And yeah, we got a handful of doubles, we got one triple, and the party's just starting. It's going to be awesome. Anyway, oh man, this is so great. Crypto is so fun. All right, that's probably good for me. I'm sorry for starting a little bit late. Wednesdays, I drop off my kids at school, and then I went and had some errands to run. And I didn't quite get back on time, but I'll try to be on time better. All right, that's it. You guys are awesome. Thanks for being here. We will catch you on the next one. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.